Hi everyone, Michael here. In today's video, we're going to be going over the latest housing market news and the latest housing market data in Australia to see exactly how much did house prices rise or fall in the month of August. For all my Australian viewers, they've been asking for more Australian updates, so I got to give the people what they want. So everybody, let's have a look to see what effect these lockdowns are having on the Australian housing market, and let's have a look at what some of the trends are going to be for the future. Okay everybody, so Australia's housing boom defies lockdowns even as growth eases. And CoreLogic said they didn't include Perth or regional Western Australia data pending the resolution of a divergence from other housing markets measured in WA. Okay, so let's see what states were the best performers and what were the worst performers. Okay, so first things first, Sydney. In the month of August, it went up 1.8%. So it looks like the growth in Sydney is starting to slow down. The lockdowns are starting to have some effect. And for those wanting to know, Sydney's up 6.4% over the quarter and it's up 20.9% year over year, which is absolutely crazy. But this kind of growth isn't going to continue. We will see a slowdown. And the median value is $1,039,000. Melbourne continues to be a weak performer with, being in the sixth lockdown here. It's been pretty frustrating. And over the quarter, it's up 4%. Year over year, Melbourne is actually the weakest performing market because I'm sure a lot of people are trying to get out of here. Even me, I'm trying to convince the wifey to move up to Queensland. So I'm sure a lot of other people are thinking the same, trying to get out of Melbourne and trying to get out of Sydney, and they can get some more affordable homes up in Queensland or whatever other state they want to move for a better quality of life, especially if they can work remotely. So as Brisbane is now outperforming Melbourne and Sydney, so a lot of investors have been speculating that Brisbane would. So we'll see if this trend continues. Brisbane is up 2% in the month of August. It's up 6.1% over the quarter, and it's up 18.3% year over year. And it's got a median price now of $612,000. So Adelaide is up 1.9% in August. It's up 5.3% over the quarter, and it's up 17.9% over the year, with a median price of now $522,000. Hobart, now they've got a really bad housing shortage and housing crisis in Hobart. I'm sure you've seen all of the news. Some people, facing homelessness because there's not enough rental properties or affordable homes in the market, and this market's going completely crazy. It is the best performer now, overtaking Darwin for year over year. It was up 2.3% this month. It's up 7.2% over the quarter, and it's up a crazy 24.5% year over year, with a median price of now $639,000. Now Darwin had a big shift this month. It actually fell. The only state pending WA's data and Perth's data, it actually fell 0.1%, and it's up just 2.4% over the quarter, but it's still up a fair bit year over year of 22%. And the median price is Australia's cheapest now. It's only $486,000 for a home, the average home in Darwin. Canberra continues to be a strong performer. It's up 2.2% over the month, 7.3% over the quarter, and it's up 22.5% year over year, with a median price now of $816,000. So the combined capitals, the average was 1.5% over the past month, 5.2% over the quarter, and 17.5% over the year. So the combined capitals, the average is now 751,000. But the regional markets continue to outperform the capitals with more affordability, with lesser restrictions due to the lockdowns, and with some people being able to work remotely, which who knows what's going to happen to those jobs in the future, but that's a topic for another video. They were up 1.6% over the month, and they're up 5.2% over the quarter, but they're up much more year over year, up 21.6%. So I'm definitely glad I chose to buy land and build in regional Victoria instead of metropolitan Melbourne a few years ago. So CoreLogic says housing values have risen at a slower pace in the past few months, but that probably has more to do with worsening affordability constraints than the ongoing lockdowns. So what we're starting to see here, everyone, in the Australian housing market is we're starting to really see in Australia overall is a two-class society. The middle class is getting absolutely smashed with these lockdowns, with people losing their jobs, with small businesses getting destroyed, and really with wage growth not keeping up with inflation. And I'll get into later in the video how house prices are going up 10 times faster than wages. So really, we're starting to see the difference between the have and have nots. If you got 2 or plus properties, you're doing great. It doesn't matter what the economy does. For investors, they don't care if we're in a recession or if there's lots of unemployment. As long as they got their property going up, even maybe if their tenant's not paying rent, well, that's a tax write-off for them. And as long as they can keep taking out that equity and using it as a credit card, they don't really care what the Australian economy is or how the average Australian is doing. But also what you have to know is in the month of August, a lot of people that were deciding to sell their property took their properties off the market because of lockdowns. This isn't really a normal month where we have a lot of property sales and a lot more data. Really, we'll have a much better picture after the lockdowns, how the housing market will really perform once more people start deciding to put their properties on the market. Because right now, the reason why prices are going up so crazy is because there's not enough supply, which it gets into here. So it says property prices went up sharply in August despite a sharp fall in the number of properties advertised for sale. So CoreLogic noted that in August, the number of property listings fell 5.4% below the 5-year average. In contrast, a lot more people wanted to sell their properties before the outbreak plunged straight into various restrictions. Listings before the lockdowns were actually 19.7% higher than the average in early May. So that's very interesting, everybody. There were a lot more properties on the market before these lockdowns, but now people don't want to list them during these lockdowns because they may not think they'll get a good price. So with the spring property market coming up, where we do normally see a lot more properties come on for sale, and all the people that have wanted to sell their property over the past 3 months, if we do see all of a sudden a huge amount of supply added onto the market towards the end of the year, we could see this house price growth start to slow down very quickly. Because listen to this, everybody. Housing prices have risen almost 11 times faster than wage growth over the past year. So obviously this is creating a more significant barrier to entry for those who don't own a home, CoreLogic Mr. Lawless said. So that's absolutely crazy, everybody. House prices are going up 11 times faster than incomes. And so this is really making the Australian dream of owning a home just that, a dream. Nobody wants to end the party and the cash cow. Australia's hooked and addicted to crazy house prices, but this makes our economy and our country unproductive. We're not a very sophisticated economy, and it takes all the talent out of other industries that could make us more productive, and people go where the money is, so all the talent is going into housing. So with this house price growth, this is the fastest house price growth in 32 years. Absolutely crazy. And normally when we do see this highly speculative house price growth, which creates financial instability, the regulators step in, like what they're doing in New Zealand. But APRA saying, oh, you know what, just 10 times higher than wages? No, we can do better than that. Maybe I'll step in when they're rising 20 times faster than wage growth. But I'll just show you a chart here, everybody. We can see the price growth is starting to slow down. This is at Bloomberg. We can see in March it was growing at 2.8%, then in May 2.2%, and then in June 1.9%, then July 1.6%, and now in August 1.5%. So we can see the trend here. It is slowing, and what we really need is more supply in the housing market. And these months aren't really good months to look at it, but we can see in Melbourne and Sydney, the lockdowns are having an effect because those are the two weaker performing markets. But also we're seeing a big divergence between houses and units. Houses are booming, but units are performing a lot weaker. Let's have a look, everyone. So in the rental market, Australia's closed borders are crippling growth on apartment prices, which have risen less than half as much as housing rents. The trend is most pronounced in Melbourne and Sydney, the data shows. The weaker trend in unit rents across Australia's two largest cities is likely a reflection of their greater exposure to temporary overseas migrants as a source of rental tenancy, especially foreign students who would normally underpin inner-city high-rise rental demand. So still rents are up 8.2% over the past 12 months, but that's just because they really fell a lot in April, May, June in 2020. So it's more just they're rebounding, and the largest rise since 2008. But the gap between housing sales growth and the cost of rent has dragged gross rental yields down to all-time low of 3.3%, the data shows. So falling rental yields, that could be another catalyst as well, because investors, they need yield, because when they go to the bank's going to ask how much rental income are you receiving. So if they're not going to get enough rental income, then that means their borrowing capacity will be reduced, and that means they won't have as much money to go out there and bid up house prices. So everybody, what does this mean in simple terms? This means although we're seeing crazy house prices growth, it looks like there's no crash in sight. The crazy speculative house price growth is slowing, and it's going to take a while for the dust to settle for us to get this data, because the data always lags. So we're going to really have to wait to see what happens after these lockdowns, what's really the effect on the Australian economy, and we're going to have to see what happens in the spring selling season if the lockdown restrictions do ease, and if all those people that wanted to sell their properties in May do come and list their properties on the market. And if we do get a big surge in supply on the market, then hopefully this price growth will slow a lot. But everyone, that was just a quick update on the latest information that's happening in the Australian housing market. What do you think will happen late this year and early 2022? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you up to date with the latest happening in the stock market, housing market, and global finance news. Now, if you're bored, I'll put up some other videos here. I'll see you all there.